What's going on, everybody? It's Tuesday, October 11th, 2022, episode number 28. So today we're going to cover what happened on US 500. We were able to profit just over 20 points or so. I was annotating all day or this morning what was going to happen, which was really cool to see play out. It happened basically to a T. I posted in the afternoon. I was looking for something, so I'll touch on that. Hopefully, none of you guys took that, and I'll explain why either A, you could have avoided that trade, or B, for me, I was already done for the day. So it was just me observing. I've been partially sick this week, and I'm still trying to get over it. So I'm surprised my judgment's been as good as it's been with me being pretty sick. So I hope you guys were all watching and following along. I hope it was pretty easy. This happened fairly quickly. Now, if you weren't able to catch the 1 minute, 2 minute, or 3 minute setup that I was able to, the 5 minute, which I annotated, was also a valid setup that you could have gotten into. So I'll go ahead and cover that. Everything played out to perfection. So definitely leave a comment if you guys were able to profit. I also stated that not every day or every week's like this. For those who are new and are following the Telegram, even last week I only took one trade last week, and that was on a Thursday. So it goes to show every single week's a little bit different, and that's really where your psychology comes into play and maintaining that discipline. Because I even talked about after these two back-to-back good days, you should be done for the week. Like both of those offered 20 plus points. You were able to profit if you're doing a 1% risk, probably over 4%. That is more than enough even for a month. You guys have to really understand what you're doing here and what you're turning over in profit. Because if you let the greed, you let the overconfidence get to you, that your demons and your bad habits are always one doorstep away from you. And that's something I always keep in the back of my mind when I'm running hot and I'm doing well, especially the last 3 weeks. I don't think I even have taken a loss in the last 3 weeks. And I know that in the back of my mind. And I know that, that overconfidence can really get to you, man. It can really, especially being on social media, especially when people are glorifying you, you really have to maintain a level head in this because the market doesn't give a flying shit about what you've done, who you are. And like I said, those bad habits are always one step away. So let's get into it. The picture on the right is my entry and the partials taken. Beautiful trade overall. So let me go ahead and dig into this. Let's go out to a daily chart. Per usual, we're going to start here. There's nothing significant to note on the weekly besides this previous week low. So I talked about yesterday the volume imbalance that's resting here. And I talked about how ICT says that you should, and this goes for fair value gaps as well. It's like price is like a paint roller, and it's kind of just rolling over that, painting over it, and filling it in because it was missing some delivery in there. So we went ahead and rolled back over it. So to me, this is now pretty much balanced. I don't see a reason to go back into there. I don't see a reason to come back in this fair value gap. I would much rather us just stay heavy. And tomorrow, more than likely, we're going to take out the sell side resting here at 3558.8, and then we can start attacking these lows. I'm personally done for the week. I'll probably be just paper trading and just tape reading, and I'll update in the chat, of course, what's going to happen. One thing I did want to note, I don't want to hand hold too much, but I know a lot of people are new here, so it's really good to have somebody kind of hold your hand through this and kind of direct your eyesight to where price is going. But eventually, I would advise, and even with ICT, kind of separate yourself from ICT or myself and really start to do the reps by yourself, because that's really where you start to gain your confidence. Going down to a 4-hour, I talked about in the pre-New York session, price looked like this. It didn't look as the close here, but we're basically a full bullish candle here. And this is where some people get scared and they're not experienced enough to understand that I like buying, or I like selling in up close candles, and I like buying in down close candles. So we were returning into this fair value gap here, and returning into that bearish order block here, which is your last up close candle. So those are great confluences on a higher time frame to let you know that, okay, price is bearish, or at least respecting bearish PD arrays, and we're bearish overall. What's the narrative? We've been aiming towards this low all week, since the beginning of the week. That's the only narrative that we've had. So it's not like we've been switching sides. Looking at the dealing range from this high to the low, if you wanted to do a body to body here at that time, or even just a wick down here, we're inside of a premium. So those were really good indications for us to suspect bearish prices. Now, if we dig into the 1 hour time frame, there actually wasn't much in here that I was noting, but I did note on the 30-minute, the fair value gap here. So I was annotating how we fully closed it in. We were in a premium, a pretty deep premium relative from that dealing range high here down to the dealing range low from the low made in midnight there. So that's really good to see coming into New York session. And price actually looked like probably like this, if I am not mistaken, when I sent that video out. Hopefully this loads here in a second. There we go. So it looked like this, just so those who didn't get to see this, price was looking like this coming in New York session. And I was targeting these relative equal lows here. And then I was, overall, I really wanted to see 35.58 get taken out. But that's the reason why you don't be so egotistical about your take profits. You take the low-hanging fruit, you take partials, and you don't try to arm wrestle the market. You get the pound of flesh, and you get out of the market. So going down to a 15-minute, the fair value gap is here. Basically fully close it in there. Excuse me. Going down to a 5-minute. Now, if you go back to my video, I stated pretty clearly what I was expecting price to do. I was expecting a displacement lower, and that return back into a premium, the fair value gap, and then the displacement lower. Only reason that I could see a reason why most people or the beginners wouldn't be able to catch this is because it happens so fast, and that's being on these lower time frames. You know, in hindsight, if you go and back test, you're like, oh, that's super easy. But things happen on a dime, that they happen so quickly that you have to be able to react. And that just really comes with experience and executing over time. You'll be able to get a feel for it. Looking at the 5-minute here, especially too, I didn't note this. I was watching order flow. Order flow was already respecting bearish PD arrays. So it was respecting this bearish fair value gap here, and then obviously the higher time frame one as well. So that's a really good sign coming into New York session. If you were trying to look at the YouTube model, we rated out buy side liquidity here. So you have the buy side liquidity being ran here. I actually changed this to blue. And then we're watching for that displacement. So then I was monitoring the 4, 3, 2, and 1 minute. Now this could have been a possible entry for you. This is just before the open, which is not my rules or criteria. That's just personally me. But if you feel comfortable doing that, more than welcome. Let's go down to a 1 minute here. So I actually stated, let me roll over here. It was like right here is when when it was fully bearish, I sent a message. I said, don't FOMO. It's your entry or nothing. And that's what usually keeps me calm, because my old self would really want to chase this thing. And I just know that the model works. And if I just submit to my own model, submit to the own rules, and if I miss it, so what? It is what it is. But I submitted to the rules, and I was looking at this fair value gap here. And it happened so fast I wasn't even able to set a limit. I was just watching it on my MT4, and I wish it would show the fully bullish candle, but it was fully bullish here and I sold off. And that's the phenomenon or the repetition of, seeing these patterns happen. You're gonna have to get used to selling in up close candles and buying in down close candles. That's just how this algorithm works. You're gonna have to get used to it and just really have no fear when entering. And stop was above here, so I was really only risking, I believe my entry was like right here. I wasn't fast enough to grab this. Like it happened within probably 30 seconds. If this was on like maybe a 2, 3, 4, or 5 minute, I probably would have been able to have some time to set the limit in here. And looking at the dealing range, just so we meet all of our criteria, it dips into that premium. You have a market structure shift here, here, underneath this low on the 5 minute. We got underneath it. That's a really nice displacement off the backbone of the context of the higher time frame fair value gap, the buy stops being ran. So that was really nice to see. And then we see this displacement lower. And you're looking at these relative equal lows. These are really, really nice being built up during the London session. And then I took your attention to the 5 minute here. Delete some of this. So I noted this fair value gap here. I said we should not close above this. The reason being, price is bearish. We should be respecting bearish PD arrays. If we close it above this, then that means trade is more than likely invalid. Okay, there's nothing in here all the way up here that needs to be rebalanced. There's no open fair value gaps. There's no reason why price would need to go back up. So that was my last and final point. I said if we close above this, then I'm just killing the trade. It's done. And then we came off of it perfectly. So even if you missed that 1 minute, that is a valid entry to me. You could have put your stop loss above this high here and then been shorting underneath these lows. And then we got perfect speed underneath these lows. And then I'll actually go ahead and annotate what happened. So this whole thing was a market maker buy model. You don't need to know the market maker buy model. To me, the market maker buy model is really good to know, but the YouTube model is all you need because the YouTube model tells you or shows you the entry technique for market maker buy or sell models. You're going to see it regardless. You're going to see the entry pattern regardless, even if you see the market maker seller buy model. I'm not saying not to study it. It's a great thing to know, but in my experience, you honestly really don't need to know it. You just need to know the YouTube model. That's all you need. Okay, so once you see this displacement underneath the low, you can go ahead and check your SMT charts. US 100, NASDAQ made the lower low, and then US 30 did not make that lower low, along with US 30, so these are the relative equal lows. With US 100 and US 500, it did not make that lower low. So that is a bullish SMT divergence. Okay, so that's really good to see. And then coming into the later portion of the New York session, this to me right here is not super valid. Let me go ahead and show it. So we ran out the sell stops. We displaced higher here. We came back into this fair value gap here. This would be valid to me. I just like to see a little bit more information than trying to buy this. That's just personally me. The most valid and the best setup, I'll show you it. But let me talk about this for a second. So we displaced higher, and then we came down. We ran out on the 1 minute sell stops here. We came back into this little fair value gap here. It's actually pretty decent if you used like this swing low here to the swing high here. It's pretty valid. To me, the 2 minute, or maybe was it the 3 minute? 3 minute was nice with an order block in there, and then you have it coupled with the 2 minute order block. So let me touch on that. So once we displaced higher, you have your market structure shift here. I'll just put it right here. Okay. And then you have that, these two down close candles here are your bullish order block. And then you have the fair value gap from this low here to the high up here. And then if you look at the dealing range, we dipped into a discount. And then you would be targeting the buy side liquidity resting, if we didn't take it out, here, and you would be targeting the high here set from the morning. So those would be your targets for that trade, which ultimately, if you bought underneath the discount, that was just about 20 points. So even if you missed the morning session, there's still a great opportunity, especially in here. You could have gotten here, whatever works for you, or this one as well. And then we displaced higher above there. All of this, there's really nothing to note for me personally. So I think there was a good amount of opportunities for you to capitalize. And even if you didn't, live trade it or even demo trade it, it's good to put it away in your study journal and even print it out, put it in a binder, and just kind of go through it like flashcards. That way you can just kind of get that pattern recognition. Now, touching on what I sent in the Telegram, I believe price was like right here. This was coming into the PM session. I saw price displaced higher. I really wasn't like checking the charts too much. I got back from the gym and I saw this. I saw the fair value gap here and then this down closed candle here. And it was kind of off the context that we ran out the sell stops. Like we have 3 drives, 1, 2, 3, and then we even have a 4th drive here into the lows with the sell stops being ran. And then I was looking at the dealing range from here to here, and I was like, okay, that could be a possible bullish bias where we send it into the buy side liquidity above here. But really all we were doing, we're returning into this bearish reclaimed order block, which isn't really the cleanest. If you look at maybe like a 30-minute, there was a little fair value gap here, coupled with the balanced price range. 15-minute as well. The way you could have saved yourself, like let's say you did take this trade and you're trying to go off of this fair value gap here, the YouTube model protects you, okay? And this is something I used to do on higher time frames. I'd be entering off like a 1 hour, a 4 hour fair value gap order block, and I'd find myself getting stopped out a lot because if you go down to like a 5-minute even, in the same area where that 1 hour bullish fair value gap was, we never got anything on lower time frames to even displace higher from there. And do you see how on the 15-minute, 30-minute, in the morning session, we got that nice displacement lower on a lower time frame? That was our confirmation. I'm not going short off of the 15-minute, 30-minute fair value gap here. I'm waiting for lower time frames to confirm that. So looking at like a 2-minute, 1 minute, is there anything even inside of that bullish order fair value gap for us to go long? No. So you should have known immediately, like, okay, nothing's even in here. What you should be waiting for is watching that area of interest. You should be waiting on like a 1 minute, 2 minute, 3-minute for that displacement higher with the fair value gap inside of a discount, and then you go long. That is how you protect yourself. Personally, that's the way I see it. So that's how you could have avoided that trade. And it just goes to show that the algorithm is never wrong. It's always the trader who is analyzing the algorithm who is wrong. Okay, so if you ever find yourself getting stopped out, don't believe that it's the algorithm that's, stopped working. It's just you who's personally interpreting it wrong. And that can go into like a mistake tilt section in psychology, but you also have to understand the root cause of really mistake tilt is trying to seek perfectionism, and perfectionism is not attainable. You have to understand that. Perfectionism is a very deep subject, but if you just understand at the core of it that we're humans, we're going to make mistakes and errors, and if you can understand that your strategy incorporates mistakes and incorporates losses, and you can see that over time you're still going to be profitable, that's how you keep yourself calm through losses. So that's really it for me tonight, guys. Tomorrow coming into the session, I'd rather us just stay heavy into the sorry, let me actually get rid of this. I would rather us stay heavy into the sell side liquidity. I don't think we need to take out the previous day high. I think we can just roll over, personally. I'll update in the morning what's going on, but I probably won't be trading. I'll just be paper trading for the rest of the week. There is a lot of news tomorrow, Thursday, and Friday, so be aware of that as well. Until then, tomorrow, I'll talk to you guys. Good luck and good trading.